Welcome to Eagle Mind, enlightening you today with... Before we begin, please show your support by hitting the like button and subscribe to my channel for more upcoming videos.
Disclaimer.
RPGT is the chargeable tax on the profit made from selling or disposing of your property. You are required to pay the RPGT if you have made profit when you are selling at a higher price than the price you bought. There are three categories of RPGT rate against the holding period. In this table, you can see the RPGT rate is charged differently to citizens and permanent residents, foreigner, and company. In short, the longer you hold your property, the lower the chargeable RPGT rate. The formula to calculate the RPGT is the selling price minus the purchase price minus off any allowable expenses, then multiply with the RPGT rate. Have you ever wondered, what if you bought a property back in 1990s at RM 100,000 and selling currently at RM 1 million? At a 5% RPGT rate, you are still required to pay a whopping RM 45,000. As stated in our Budget 2020, the base year of acquisition is revised as at 1st of January 2013, taking reference to the market value evaluated by the Valuation and Property Service Department, also known as Jabatan Penilaian dan Perkhidmatan Harta. So, whatever the price you bought before 2013, they will take the property price evaluated by them as of 1st of January 2013 to be your buying or acquisition price. For the allowable expenses, they are legal fees, real estate agent commission, stamp duty for transfer, cost of renovation and extension of the house, cost of preserving and defending of the land, and the cost of advertising when selling the property. All these expenditure claims are subject to proof of receipt bearing the company number and or the SST registration number of the issuing company. So please take note on this. It is time to check back and keep all relevant receipts for future use. However, for the bank loan installment interest payment, the Inland Revenue Board had explicitly stated that it is no longer accepted as allowable expenses. These are the RPGT exemptions, which will be discussed individually. According to Section 8 of the RPGT Act 1976, there is a once-in-a-lifetime RPGT exemptions for residential home disposal. There are three conditions to be fulfilled. First, you must be a Malaysian citizen or permanent resident. Second, the property must be a residential house for dwelling purpose only, and this can be proved by utility bills or tenancy agreement. Third, the intention of exemption must be made in writing via the declaration in the relevant form, which will be discussed in the next point. Another RPGT exemption is the transfer within family members via love and affection without monetary consideration, such as between spouse, parents to children, and grandparents to grandchildren, vice versa. However, transfer between siblings, even without monetary consideration, is not eligible for RPGT exemption. Next, the disposal of low-cost property below RM 200,000 after the 6 years is eligible for the tax exemption without affecting the status of the once-in-a-lifetime disposal. Next, under the Penjana scheme initiated by the Malaysian government, there is a RPGT exemption for Malaysian citizens only up to 3 residential properties disposed between 1st of June 2020 to 31st of December 2021. Lastly, you won't be charged for any RPGT if your property is sold at a loss. The discussion has been partly introduced in our previous video. I'll put a link here for you. Just a quick refresh, the purchaser lawyer will forward the retention sum to the Inland Revenue Board via Form CKHT 502. Then, the The payment receipt will be given to the seller's lawyer as a supportive document while filing the CKHT 1A on behalf of the seller within 60 days from the date of the sales and purchase agreement. The deadline of 60 days is very important. Filing later than that, the Inland Revenue Board will impose a 10% penalty. If you are opting for the exemptions, you will need to comply with the condition discussed in the previous point and file the Form CKHT3 accordingly. Please remember to submit all receipts for allowable expenses as discussed in point 2 together with the CKHT form. You may refer to the timestamp as stated below to revise the essence of this video. If you think this video is helpful, please like and subscribe to my channel. Share it out to your friends and family to benefit them as well. Comment down below if you have any questions. Thank you, and I will see you in my next video.